The US-China rivalry has moved beyond tariffs and technology. It's now playing out on the energy front. Crude oil, LNG, and behind-the-scenes deals are redrawing the global geopolitical map. In this high-stakes game, one nation quietly emerges as the silent winner. So who truly holds the leverage? And why can a gas pipeline reveal more than a summit? Today's video offers a neutral, educational analysis. Let's explore the issue with an open and objective mindset. The emergence of Li Chang. China's decision to appoint Mr. Li Chang as the new chief trade negotiator is not merely a matter of personnel change. It signals a strategic move amid increasingly tense and complex US-China economic relations. The choice of a figure believed to possess a more flexible and modern outlook suggests that Beijing is preparing for a tougher and more prolonged negotiation cycle, potentially extending beyond traditional tariff issues. Instead, topics such as technological supply chains, intellectual property rights, and economic security are expected to become central to future discussions. This development also reflects China's effort to reshape its position within the rapidly evolving global trade landscape, especially in a post-pandemic world marked by geopolitical volatility. So grab your popcorn, because with Li Chang at the table, these trade talks might be more suspenseful than your favorite Netflix thriller. The meeting between President Trump and the Italian Prime Minister. Against the backdrop of stalled trade talks between the US and several global partners, the meeting between President Donald Trump and the Italian Prime Minister was more than just a diplomatic formality. It was a calculated gesture to reaffirm Washington's presence on the global stage, particularly in Europe and by extension Asia. While the summit produced no formal agreements, President Trump's upbeat tone signaled a continued preference for engagement over escalation. His remarks suggested that, despite rising tensions, the U.S. remains open to dialogue, perhaps to avoid pushing trade disputes into full-blown geopolitical crises. The timing, however, raised eyebrows. Coming just as the U.S.-China standoff intensified, the meeting hinted at a deeper strategic play, reinforcing transatlantic alliances as leverage in America's broader competition with Beijing. Was it about strengthening economic ties with Europe? A subtle message to China? Or maybe just diplomacy over dinner and pasta? Whatever the case, one thing is clear. International politics often happen as much between the lines as at the negotiation table. And in moments like these, being a fly on the wall, fluent in both English and Italian, might just be the best seat in the house. The US imposes a 245% tariff on Chinese goods. Washington's move to impose tariffs of up to 245% on specific Chinese imports marks a turning point in global trade dynamics. This is not simply another chapter in a tariff dispute. It is a strategic escalation that signals a transition from selective containment to full-spectrum economic pressure. What began as a focus on technology has now expanded into vital sectors like energy, rare earths, and industrial inputs. The consequences have been swift and far-reaching. Energy markets, in particular, have felt the tremors, with supply chains under pressure and corporations rushing to reassess procurement models. This policy shift forces not only U.S. firms, but also global investors to grapple with a more fragmented and unpredictable trading landscape. Moreover, the measure reignites deep-rooted debates over protectionism in a hyper-connected world. While the intention may be to shield domestic industries, such steep tariffs could inadvertently fuel inflation and raise costs for consumers, especially in economies reliant on low-cost Chinese imports. As the price of everything from electronics to energy spikes, the question remains, is this aggressive stance sustainable, or are we entering a new era where economic self-isolation comes at a higher price? Energy tensions, a new front in the US-China trade war. The US-China economic rivalry has entered a critical and less expected domain: energy. After Washington ramped up measures aimed at limiting China's technological and industrial ascent, Beijing responded with quiet but forceful precision, halting imports of US crude oil and LNG. This wasn't mere retaliation. It was a signal of strategic realignment. China is recalibrating its energy dependencies, looking to minimize exposure to nations it deems politically unpredictable. In the current geopolitical climate, energy has transcended its status as a neutral commodity. It has become a tool of leverage, negotiation, and even deterrence. This shift in purchasing behavior is also a calculated move toward national energy security. Rather than risk being held hostage by volatile global dynamics or political tensions, China appears to be laying the groundwork for a more self-sufficient, diversified supply network. The message is clear. In the world of great power competition, energy flows will follow strategic trust, not just market logic. Redrawing the energy map, China turns to Russia and Canada. Rather than confront the US head-on in an extended energy battle, China has taken a far more strategic path, pivoting its import focus to Russia and Canada. Both countries offer not only vast reserves of oil and gas, but also the political willingness to engage in long-term, stable energy agreements. This reorientation is about more than just access to supply. It's a deliberate attempt to reshape the structure of global energy alliances. By broadening its energy partnerships beyond traditional Western suppliers, China is actively diversifying its risks and enhancing its resilience in the face of political pressure or trade disruption. Additionally, this approach grants Beijing stronger leverage in global negotiations. By spreading its energy dependencies across a wider array of nations, China becomes less vulnerable to unilateral sanctions or market manipulation. In a world where energy security is intertwined with climate instability and geopolitical unrest, such calculated diversification may become the new standard, not only for China, but for any major power seeking to insulate itself from external shocks. This quiet yet decisive redrawing of the energy map illustrates how influence in the 21st century may be built not through confrontation, but through consistent long-term strategy. A sharp decline in U.S. energy exports. China's decision to slash its crude oil imports from the U.S. by up to 90% marks more than just a dip in trade. It strikes at the core of America's long-standing energy export strategy. For years, U.S. energy policy has operated under the assumption that fast-growing Asian economies, particularly China, would serve as stable, high-volume buyers. That assumption has now been upended. The sudden downturn has sent shockwaves throughout the entire American energy ecosystem. It's not just oil producers feeling the pinch. LNG terminals, refinery operators, and logistical support services are all grappling with the consequences. For states like Texas and Louisiana, which have built entire economic models around energy exports, the loss of the Chinese market presents a serious challenge. How to sustain growth when one of their biggest customers effectively vanishes overnight due to geopolitical friction. This disruption reveals a hard truth. Even the most technologically advanced and well-connected energy networks are highly vulnerable when national interests clash. When political strategy overrides market logic, the ripple effects can be swift, deep, and far-reaching. China accelerates global energy agreements. While the U.S. takes a cautious approach amid volatile energy shifts, China has moved decisively, rapidly locking in long-term energy contracts with key global suppliers like Russia, Qatar, and Australia. These are not just tactical purchases. They are part of a broader, forward-looking strategy to construct a resilient, diversified energy web across multiple continents. Beijing's moves reflect more than commercial logic. They reveal a deliberate intention to reduce its dependence on any single source or alliance. This multipolar energy framework serves two purposes. First, it cushions China against future geopolitical shocks. Second, it strengthens its hand in global negotiations by giving it flexibility and alternatives. Moreover, by prioritizing partnerships with resource-rich countries in the global south, China is subtly empowering a new set of players in the global energy order. These nations, often overlooked in traditional power structures, now find themselves with enhanced leverage and new relevance in a shifting world. China's swift energy diplomacy illustrates how pragmatism can become power. While others hesitate, China acts not only to secure supply, but to reshape the very architecture of global influence. The real takeaway? Energy is no longer just about keeping the lights on. It's about illuminating a path to global leadership. Strengthening the China-Canada Energy Alliance. As trade tensions with the U.S. rendered American energy supply increasingly unstable, China looked northward. Canada, with its vast oil reserves and politically stable framework, emerged as a natural partner. But instead of relying solely on short-term trade contracts, both countries are pursuing long-term, strategic developments, such as large-scale energy infrastructure projects including new pipelines and export terminals on the Pacific coast. These efforts enable China to diversify its access points and gain greater autonomy in managing its oil and gas flow, reducing the risks associated with choke points like the Strait of Hormuz. For Canada, this is an opportunity to break free from its traditional dependence on the U.S. market and reposition itself as a central energy pillar for Asia in the 21st century. In my view, this is a prime example of how mid-sized countries like Canada can seize moments of global crisis to redefine their roles on the geopolitical energy map. Without confrontation or bold declarations, Canada is quietly asserting its position through stability, transparency, and long-term strategic investment. I believe that if this trend continues, Canada will not only serve as an alternative supplier for China, but could also become a key partner for many other Asian nations seeking to reduce reliance on politically volatile energy sources like the US or the Middle East. In an increasingly polarized world, countries that take one step back to move 3 steps forward, like Canada, may end up being the biggest beneficiaries. U.S. companies pivot to Europe and Latin America. The loss of China, once a dominant source of revenue for U.S. energy exports, forced American energy firms to act swiftly in seeking new markets. Their attention has turned to Europe and Latin America, regions with developed or emerging economies. However, this redirection is fraught with challenges. In Europe, the U.S. must compete with Russia, which benefits from geographic proximity, lower transport costs, and expanding influence through projects like Nord Stream. In Latin America, home to potential markets such as Brazil, Argentina, and Mexico, political and institutional instability creates barriers to sustainable engagement. Moreover, these regions may not offer the volume needed to replace Chinese demand. High shipping costs and complex logistics chains further complicate the shift, forcing American companies not just to sell products, but to restructure supply chains, adjust pricing models, and invest significantly to build trust in new territories. The energy flow rewritten, a global migration of power. In the post-globalization era, energy no longer travels simply along the cheapest or shortest paths. It now flows along lines defined by trust, security, and strategic alignment. The global map of energy is being redrawn, not by geography, but by geopolitics. China is securing long-term energy stability through deals with Russia and Canada. India is deepening its relationships with energy-rich nations in the Middle East. Europe, anxious to diversify away from Russian gas, is accelerating LNG imports from the US and Qatar. Meanwhile, traditional energy giants like Saudi Arabia and the UAE are recalibrating their roles in a world where the US is no longer a major importer, but a self-sufficient producer. This realignment isn't just about logistics or contracts, it's about influence. Energy has become a form of soft power, shaping not only markets, but global alliances. In this new era, a pipeline or shipping route can carry not just fuel, but also diplomatic weight. Fuel is no longer just fuel. It's a geopolitical statement, a strategic advantage, and a currency of global power. From trade to confrontation. The trade war between the US and China has spilled over into one of the most vital arteries of the global economy, energy. When Washington slapped steep tariffs on Chinese goods, Beijing didn't just respond with counter-tariffs, it cut off a key link by halting imports of US crude oil and LNG. This was no empty gesture. It targeted industries central to the economic lifeblood of politically influential US states like Texas and Louisiana, sending a message that China, too, holds powerful cards in this game. The response wasn't just reactive, it was strategic. By combining assertive trade responses with rapid diversification of energy sources through deals with Russia, Qatar, and others, China demonstrated its dual-use strategy, employing both hard and soft power. It's a calculated move that turns energy from a market commodity into a tool of geopolitical maneuvering. What this underscores is a new global truth. Energy trade is no longer about mutual gain alone. It's about positioning, influence, and leverage in an era of great power competition. The battlefront has expanded, and oil and gas are now at the center of the diplomatic chessboard. Rebuilding U.S.-China trade, a clouded horizon. After more than 5 years of intense trade tensions, the path to restoring U.S.-China economic ties remains murky. While some experts maintain a cautiously optimistic view, believing that both nations will eventually return to the negotiating table to preserve global supply chain stability and prevent economic fragmentation, others are less hopeful. These skeptics argue that the rift has grown deeper than just tariffs or trade imbalances. It now reflects a long-term rivalry rooted in technological supremacy, geopolitical influence, and divergent visions of global order. With the U.S. heading into another potentially volatile election cycle and China pivoting toward greater economic self-reliance, the current decoupling trend may not only continue but deepen beyond 2026. What we're witnessing may be less about temporary friction and more about a systemic shift, an unfolding transformation of the global economic architecture itself. China's soft counterattack strategy. Instead of engaging in a headline-grabbing war of words or retaliatory tariffs, China has chosen a quieter, more strategic path. It has gradually distanced itself from being one of the U.S.'s largest energy customers. While public discourse centered on trade battles, Beijing discreetly scaled back its long-term LNG purchases and rerouted crude oil imports toward alternative suppliers such as Russia, Qatar, and Canada. This move isn't merely a commercial adjustment, it represents a deeper strategic disengagement. By withdrawing from the U.S. energy market without fanfare, China introduces a void that won't be easily filled, especially by American exporters who had relied heavily on Chinese demand. The consequences ripple far beyond trade statistics, affecting entire logistics chains, infrastructure investments, and regional economies. What's most striking is how all of this unfolded without a single dramatic announcement. It's a powerful reminder that in the arena of modern geopolitics, strategic silence can speak volumes, sometimes louder than sanctions or threats. When energy is no longer neutral. Energy has traditionally been viewed as a neutral economic good, oil and gas flowing where demand and price aligned. That neutrality is now gone. In today's fractured world, energy is increasingly used as a strategic tool. Countries are not just buying or selling fuel, they're shaping alliances, asserting influence, and projecting power. The U.S. uses its vast energy exports to sway Europe amid tensions with Russia. China, in turn, uses its purchasing power as both carrot and stick, rewarding allies and distancing from rivals. With ongoing supply chain disruptions, war in Ukraine, and the enduring U.S.-China rivalry, oil and LNG are no longer just about energy security. They are geopolitical instruments, symbols of trust, leverage, and intent in a multipolar world where resources flow along lines of power, not just profit. Who knew that a barrel of oil could carry more political weight than a summit handshake? Welcome to 21st century diplomacy, now available in crude and LNG. Canada, the silent winner on the global energy chessboard. As global energy giants clash in the open, Canada has taken a quieter but no less strategic route. Unburdened by trade wars or sanctions, it has focused on building capacity, expanding ports on its Pacific coast, laying new pipelines, and reinforcing infrastructure to meet growing Asian demand. With a reputation for stability and a location that bridges east and west, Canada is fast becoming a top choice for countries seeking energy reliability without political entanglements. China's pivot away from the U.S. has only accelerated this trend, making Canada a key node in the emerging energy order. But what makes Canada's rise unique is its method. Not through confrontation, but through quiet consistency. While others negotiate with threats or headlines, Canada builds with intention. It's a reminder that in global strategy, the loudest voice doesn't always win. The most dependable partner often does. As oil, gas, and trade routes reshape global alliances, one thing is clear. Energy is no longer just fuel, it's power, trust, and positioning in a turbulent world. While the US and China clash openly, countries like Canada are quietly advancing through strategy and stability. Who do you think truly holds the upper hand? Can strategic silence outweigh loud diplomacy? Share your thoughts in the comments. Personally, I believe that sometimes it's the quiet players who end up changing the game.